All right, so we should be live now. So we'll just kind of wait, see what happens. People come on, they start filtering in. Usually these things, you start them a little bit late. People tend to come, you want to tell them 5 minutes before. I had a couple of emails that went out. Oh, did you get the email that's saying like we're starting in 5 minutes? And it was actually like 10 minutes ago. So yeah, I see some people starting to join now. Guys that are starting to join, just say hello in the comments. If you're on Facebook, it's probably best to come over to YouTube. To just come over to my YouTube channel. There should be a link in the Facebook group for that multiple times to come over to YouTube and comment, because we can read your comments and respond better on YouTube than on Facebook. So yeah, definitely.
Hopefully we get some of the West Coast crowd. It'll be a little bit more reasonable time at 6:30, right?
Yeah, I just saw Raj appeared. Hey Raj, how's it going? Just, Corey's here as well. Vandals himself.
Oh, there we go.
Starting to turn up. Yeah, this is the first time we've done one this late, right? Like normally we do them an hour early. So
yeah, 30 minutes for an hour. When those busy kids are around, it's tough.
Yeah. So I see James just came on. Hi, how's it going, James? Should we add him to the feed?
If you want, he could just hang out.
Yeah. All right, we're gonna add James in as well. How's it going? You're live now with us.
Good.
Yeah, good. Yeah, good to say hello. And we're just kind of waiting for people to show up. It looks like a few people are watching now. Tom from Miami's watching. Raj is here. Corey's here. So yeah. So I think the idea was to do a bit of a short presentation, right, Lance? To do your kind of what Strangles are, and then kind of go into what we've been doing, and then talk a bit about the Strangles calculator that Josh has got going. So yeah, sounds good.
Sounds good. Yep. Welcome. A lot of Theta Traders members joining in. Nice to see all you guys. Like to do these live streams for general public. Like to do these for members as well. Just helping out whenever I can here. So yeah, I'll start the presentation in about a minute or two. Let people struggle in a little bit. But I've been looking at different strategies. I constantly look for new things. I even have one or two more on the back burner in my brain that I haven't told anybody yet. I'm not sure if it's viable yet. Sometimes that happens where it may not be viable, and then I don't even tell anybody. But other times, I think if it might work, I usually try it out on paper a few times first, and then I'll do it in the real deal. When I get to the late paper / doing it for real, I'll definitely let members know. So we're going to be looking at Strangles today, and also the covered strangle, which is just a slight modification to the strangle. And it's turning into one of my favorite strategies out of all of them that I've done so far, to be honest. It's very flexible. You could do different strikes. You could do different expirations. As it is right now with MES, we're at a price where it's pretty much, I'm happy whatever happens tomorrow. Like, I'm not going to stress out at all if the market goes up, if it goes down. Like, I'm perfectly fine with both situations. So we'll look at the numbers and why that works. And it's, again, very flexible strategy. It's really hard to actually do this wrong or do it where it's going to make a huge mistake, as long as you're willing to accept the initial parameters of it. So yeah, a few more people, looks like they're strangling in.
Yeah, it's always a good strategy where it's hard to do it wrong, right? That's always a good good quality to have. So that's pretty exciting. And I know you've been excited about it because you've been messaging me every day for the last week. Yeah. Check it out, Russell. It's like 8% in 2 days, and you're like,
right?
Yeah, it's pretty good. So
when I get excited, I tell a lot of people.
Yeah.
All right, let me do this quick presentation. It's not a huge thing here, but let's see if this works. It might just be my full screen shortly.
Yeah, the moment it's your full screen. Now it's the covered strangle thing. So I'm going to add it to the stream, and I'm going to just make it maximized so people can see it. So hopefully that's showing up for everybody.
All right, so education time a little bit. We're going to go over what the covered strangle is and the basic strangle too. Do all these trades on thetatraders.com. It's a educational resource. We also look at different recommendations, how the market's doing every day, and find some viable strategies. So pretty much to be selling options in order to get that consistent income that we want. So I notice a lot with buying options, like if you buy a slightly out of the money call, it's usually very risky. Like, not only does the stock have to go up, but it has to go up at a certain time period as well. So we usually like to take advantage of the theta decay of letting options just get lower and lower in value over time, and then just taking advantage of that to get that consistent income. So covered strangle, it's essentially a combination of simply a covered call. Covered call is when you buy 100 shares of stock, or you can buy a futures contract, and then you sell a call against it. It's a very conservative strategy that a lot of people use, where if the stock happens to go up, then you might lose your shares, but you received your premium. You might receive a little extra capital gains on it. And as long as you're happy with that return when you set it up, then it's a good call, right? You also are going to add a short put to it. Now, by adding the short put, you will get more income in because you're getting in income from the call and the put. And that's one of the ways to greatly amplify the returns, as you'll see shortly. It is a slightly bullish strategy in most situations. You do best if the stock or contracts for futures go up slightly in most cases. But you could also design it where it could be a very neutral strategy and you could make quite a bit of money as well. Now, obviously, it does increase your premiums over just a straight covered call because you're making money on that put as well. So one of the big things for doing these is you want to do this with stocks or ETFs or even futures. If you're willing to own for fairly long amounts of time, if needed, and you want to be able to own at least 200 shares, not 100 shares when you're first starting it out. If you're doing with futures, you would want to hold at least 2 contracts. So what a lot of people do is they might start the covered strangle. The stock goes down a bit and they're like, oh, I don't want this anymore. And then they end up getting that extra 100 shares. If it's starting to make you stressed out where you get that extra position, then it's probably not the right situation for this particular strategy. Okay? And there's other strategies you could do for things like that. Sell credit spreads that are short term, sell cash secured puts way out of the money. So there's different things you could do with different stocks, but you should be at least medium term, slightly bullish on these particular positions that you do it with. So how do you set it up? It's really straightforward, and I'll show you guys on Thinkorswim shortly. You can buy 100 shares of stock first. You're going to sell a call against it. When you sell a call, you do have the obligation to give up your 100 shares of stock if it goes above your strike price. You can sell them in the money if you want. You'll get more premium that way, a little bit of downside protection. As you'll see in the numbers, you could actually still profit if the stock goes down a little bit. And you could possibly sell it out of the money. If you sell out of the money, you won't make as much income in the beginning, but you will get more possible capital gains if you lose your shares. Then you're just going to add a sold put to this covered call. Again, it's just a covered call with a short put with it. Now, I typically want to do around 0.1 delta in most cases. So then it's a good risk return in terms of getting a good amount of income in, and also being able to possibly average the price of those 2 positions pretty well. You could sell puts higher than 0.1. You would make more income in the beginning, but then your average would be a little bit higher. If you sell a put really, really low, you would make less money at first, but your average could be different. So again, very flexible strategy. And for different people's risk tolerances, they could actually do different strikes than what I personally recommend. Here's an example I just did yesterday. Coca-Cola, pretty dependable stock. I think he'll be drinking Coke for many, many decades from now, right? It was at 59.57. I think I bought it at 59.48. So today, market didn't really move it too much. So I bought 100 shares of it. And then I sold a November 18th call against these shares. This will be the covered call portion. And I sold it pretty much at the money. So 59.57 is the current price. I sold a $60 strike for $104 in premium, which is a pretty good premium for a pretty stable, not very crazy meta Amazon dropping like a rock stocks like you've seen in the last few days, right? After that, you also sell I just happen to sell the same expiration put at 56. So you get a good amount of downside protection on the second 100 shares, and you're able to take in an extra $29 from this, okay? This is another example with Bank of America. I did this on Tastyworks. The stock was around 36 and change or so, I think last I checked. Able to buy 100 shares around that price. sell the 36 strike. So it's actually a little less than 36, I think 35 and change. And you're able to take in $136 in premium for it. This one was with margin. I wouldn't necessarily do it with margin, but if you're very sure of the stock and the position and the expirations, it could be okay in some of these strategies because it's a pretty conservative strategy that we're doing. It would only use up about $1,700 to do this first covered call, and then you're just going to add another short put to it. You could get an extra about $32 in 22 days. So if you got $136 for your covered call, make $32 more on the short put, add those up, you get $168 in premium. It only used up $1,676 plus the $432. Used about $2,100 for that trade, and you can make almost 8% on your money in about 22 days. Now, again, these are conservative stocks. They're not high-flying tech companies that will necessarily move a lot. But as you can see, making 8% in 22 days, I'm going to be pretty excited about it, right?
Mm-hmm.
So how do you profit on some of these? You're receiving your premium twice, covered calls and short puts. If the stock is flat and stays exactly where it is, you just get to collect those premiums. And again, you can make a good amount of money on those premiums, possibly 8 to 10% a month if you set them up right. If the stock goes up, you're going to lose your covered call. The short put would also expire worthless, and you keep all that premium. And then you can just do this over and over again. If the stock goes down, but still above the short put, so let's say it goes down $1 or $2, your short put could still expire worthless. You keep all that premium. You still keep all your premium in the covered calls. And then you could still do the same strategy again. Sell a new covered call the next month, sell a new short put the next month, and then get those incomes in 2 different ways. So just quick managing. If you short put is worthless, but you sell the stock, again, just sell another covered call, sell another short put. It kind of just said that. This is my last covered strangle I did. This was with MES futures for the S&P 500. We initially started it where I bought the contract at 37.68. I sold a covered call against it, pretty much at the money, 37.70. I sold a put against it too, so it's a covered strangle. And then I received 64.75 in premium, but there's a 5x multiplier on these. It ends up being $323 when I took the premiums of both. This is also a very good trade. In that particular example, it didn't hit the 35.50, but the market did drop a little bit. So it went down to 36.50. Again, a little bit above where I sold the put. So I collected all the money from the short put, collected all the money from the covered call. And then I just sold another call, sold another put. In that case, we got, 22 plus 7.5. These are your numbers multiplied by 5. And then in the very end of it, I was able to get out of the trade because right after this expiration, it closed right above the 37.70. I think it was like 37.72 or 3. So I was out of the trade. We were able to take in all this money. We did show a slight loss selling a call a little bit below where I bought the contract at. So I did lose 18 in premium here. But the reason why I did it is it gave a lot of income, $110 in a week. So I was willing to take that slight risk to lose the contract. In the end, it made about $245, I think, in 2 weeks' time. And it only used about $1,900 or $2,000, give or take. So it ended up being about 8-point-something% return in 2 weeks. This is a pretty exciting strategy to do.
Yeah, pretty nice.
So we can leave it up for any questions if anyone in the group has anyone from current members, theta traders, anyone from the public.
Yeah, so there's one from David I just put up.
If you can read it out because I can't see it.
Oh, okay, yeah. So it says, guess the perfect thing would be to sell the call on an up day, sell the put on a down day, but don't think we could time it that good, right?
Theoretically, that would be pretty beneficial to do it that way. But yeah, you're right. The timing's hard to make that work. And I personally rather not spend a lot of time looking at the market, minute to minute to see, all right, now there's a good time to do this. So I usually just sell the call and put pretty much the same time. In the last covered strangle, I did actually wait a day because I had an 8 days out and then I had a 7 days out. So I waited the next day to sell the put because it actually did drop a bit. But most of the time I just do it at the exact same time.
Yeah, very cool. Very cool. So does anybody else have any questions? I see that Raj is typing. I'm just reading it now.
Yeah. So Lance, real quick. So you don't set them at the exact same time?
I usually do set them at the exact same time.
Okay.
In this particular example, I just waited an extra day.
Okay, but if you do it the separate days, it would show up together, showing this covered strangle like that?
Yeah, you would still see it in your positions with the same DTEs, and it would still be a covered strangle. I actually think I sold one of these a day before because I was essentially waiting for the put to expire worthless. It was still 100 points out of the money, so I just decided to do it the day before, I think.
Okay.
But yeah, usually you don't have to do that at all. You can just wait for the short put to expire anyway, and then just set it up the next week. Like I'm in a current covered strangle, it's the exact same thing. The short put's going to expire worthless. Even if the market drops about 4% tomorrow, I'm still going to have that expire worthless. So I decided just to sell another short put that Friday instead of Monday just to get a little bit of extra theta decay.
Okay, so
that's
technically,
optional.
You could kind of do it like David just asked. You could, I know you can't time it. If you had a super high day, you could set your call in, super low, set your put, and then go out and do that. I see.
Yeah, you could definitely do it that way. There's nothing wrong with that.
But it just becomes the cover strangle because you're using the same strikes on just the call side and the put.
Yes.
Or, same stock, I mean.
Yep, same stock, same expiration dates. You could even fiddle around with different expiration dates, but you don't need to make it super complicated.
You're just strangling the same stock.
Yeah, these are all the same stock.
And then, sorry, Russell.
Oh, I was just going to say another question from Thomas. What if the put is exercised?
Yep, if the put's exercised, then you would be getting your 2 contracts. Let me stop my shared. All right. So if the put is exercised, good question. We're going to be having an extra either 100 shares of stock or an extra contract. So when that happens, you want to take the average of both of those positions. So let's say you bought a stock at 20, you sold an 18 call and put against it. You'll take the 20 plus 18 and average that. It'll be 19. That'd be the average of 200 shares or 2 contracts. You could also consider it as you could subtract the premiums you received too. So it'd be a little bit below that average. Right. And that's what's another good point of the strategy. If you're willing to stay in it a few weeks, possibly a few months, you could significantly lower your cost basis week after week by just constantly selling these calls and puts.
Yeah, so that's why it's good, because if you had like a stock you're willing to hold for a while, 200 shares, you do the cover call, you sell it high, you're selling for more. And it goes low, you bring your average down.
Yep, exactly. It's a win-win. I mean, again, if you're willing to hold the 200 shares or 2 contracts, like as long as the stock doesn't completely plummet, like you shouldn't be that upset if you get a sign on that short put.
Yeah.
Because then you just lowered your average. So yeah, you're pretty much starting it at half a position, willing to go to the full position if the market just drops a lot. That's a very
good. Next question is from Aaron. Aaron's asking, what's your average recommended time span to expiration?
Yep, there's many different things you could do with this. I'm personally doing these weekly. It really doesn't take much time. I do them Sunday night, usually with the futures, or you can do it Monday at open. It takes maybe 2-3 minutes to set up. And then I'm waiting until Friday, right before expiration, to see what I'm going to do. I'm currently in one with MES where I'm just going to wait until tomorrow, maybe 30 minutes before close. And then if I happen to lose my contracts, I'll just lose them, do a new one Sunday night or Monday morning. If it happens to be lower and I'm pretty sure the short put will be expiring worthless, maybe I'll just sell another short put Friday to get a little bit of extra theta decay on it. Cool. You could easily do it with monthlies if you want. Some conservative investors might even go a few months out. You wouldn't make as much premium per, say, day because the theta won't decay as much, but you could still get pretty good returns and You could even do these a few minutes every month if you wanted to. Doesn't take much time at all.
Yeah, it's very cool. David's asking, are you just doing MES?
You could do it with MES is what I'm primarily doing it with now. I was considering doing one with MNQ. That's the triple Q futures. You can do it with MCL. That's the oil futures. Now in Tastyworks, I know they let you do it there. Thinkorswim, you could buy the MCL contract. I was having trouble selling calls and puts against it. I'm not sure if that's available in Thinkorswim yet. There's others. You could do RUT, you could do IWM, you could do individual stocks. I'm personally doing it mostly with MES though, but again, it's wide open. You can do it in any stock or ETF or future you want.
Now we're getting bombarded with Raj. How's it going, Raj? I'll start putting up some of your questions. Do you like selling the covered call at the money?
Yeah. So if you're more of that, like I want an even bigger win and get 10+% in the week, you could sell a little bit more out of the money because you can make money on the contract moving up or the stock moving up. So there'll be some capital gains as well as a premium. I like selling that at the monies personally because you get a good amount of premium for that strike. And it's not as of a bullish strategy as if you sold way out of the money. So if you sell a really far out of the money call, you're pretty bullish because you're not taking in a ton of money in premium. So I personally like the at the monies, but yeah, there's nothing wrong doing a little out of the money too.
More from Raj. Do you ever buy to close the covered call or the short put, or do you let these expire worthless?
I was personally letting them expire worthless for the futures to save a little bit on commissions, but I would add on a second one while the short put is still on. Like if MES is at 37.50 and you sold a 35.50 put, literally expiring that day, it's not going to drop 200 points in an hour or two, right?
Right.
So in that case, I might sell the short put for the next week during that day. So I'll theoretically have 2 short puts on for maybe an hour or two. Yeah, I'm not buying to close these, but you easily could do that. It's just a little bit more work on your end to buy to close. All right, sell another one. You can just let them expire and go from there.
Yeah, it seems like it. So Corey's mentioning that he just got an alert that Musk took over Twitter. I thought that happened much earlier in the day. I heard about that.
I'm not sure if it's official or not.
Oh, official? Like, yeah, because I saw the thing with him pulling in the sink into the coming in with the sink. Yeah, earlier. So
Elon Musk and me have very similar humors, I think.
So another one from Tom: are the futures too volatile to do the strategy? It's a good question.
Yeah. Yes and no. It depends on what your risk tolerance is. Doing them on MES where you're taking in $80, $100 a week in premiums, I don't personally think is that risky in the end. Obviously, if MES drops a few hundred points in the week, you would be down a bit. But like in my initial position that I showed with you guys, I was down after the first week. I'm not going to lie. Like even though the premiums I received were pretty big, it went down more than that. But I wasn't stressing out about it. I didn't even get my second contract yet. And then I just sold another cover strangle off it. And then the market happened to rebound after that. But yes, that is one of the possibilities. The market could just drop a bit right away and then stay very low for a long amount of time. In that case, you may not make a ton in premium week after week because you don't want to lose a lot of money on the actual contract or not. So if you want to be more conservative about it, definitely do it with individual stocks, possibly lower price stocks. Like I showed Bank of America, KO. I'm willing to take a little bit more risk for a fairly small amount of my position personally for these MES.
Well, the advantage to the MES, like maybe we should talk about that a little bit, about why they're so good, because about the buying power and things we're talking about.
Yeah, so with MES, you could buy a contract for about $1,400 or so, give or take what the price is. And then if you sell about a 0.1 delta put against it, that's another about $700-800. So you're looking at around $2,000 for the whole position. You are pretty highly leveraged, so I'm not going to lie about that. If it moves a bit, it could theoretically hurt. but you're able to use that leverage to get a very high return. And I think the covered strangle is a really good strategy to, make it a safer trade with that additional leverage that you're having.
Raj, again, the short put, are you selling at the money or at the money?
I'm not selling at the money. Short puts, that would pay a lot in premium, but I'm not willing to necessarily get those two contracts right away. I'd rather be able to get that second contract pretty far out of the money, so then the average is a lot less. Like I'm selling these short puts 200 points out of the money or so. So again, if you're buying that second contract, getting assigned the second contract from the short put, that's much lower than the at the money, your average will be lowered. So that's why I don't really mind much if I get assigned on the second one. I just lowered my average of both.
So Casey's here. How's it going, Casey? I hope you're feeling better. I saw some health related stuff on your Facebook page. I hope you're recovering nicely. But you're asking, what account size do you recommend for ES instead of MES?
All right, so for MES, if you're going to do a full covered strangle, conservatively, you should use around $3,000. And the reason why I came up with that, I mean, that's a floating rate, but buying the contract about $1,500. If you sell the short put, it's another about $700-800. So you're at $2,200 or so. If it keeps going down from there, then you would need more additional funds to take care of the margin requirement. So $3,000 would cover pretty much every situation I could think of for one contract. If you're doing it with ES, pretty much multiply by 10. So you're going to need quite a bit of funds, $30,000, and you won't need it right away. You'll probably need about $20,000 to start it, and then have an extra $10,000 waiting on the side. What's good about MES is you could do it lower account sizes, and you could stagger when you join them too. So if the market starts to turn middle of the week and you did an MES, then maybe add the second MES at that point. But if you do an ES one, unless you have a really large account, it's hard to really fiddle around with those adding on in the middle of the week type things.
Cool. Well, maybe now would be a good time to introduce Jimmy to talk about your experience in theta traders and if you've tried any of these strategies yet and that kind of thing. Would be pretty interesting to hear.
Yeah, so I met up with Lance probably 2 months ago, 3 months maybe.
That's more than that. I think we're early summer.
Yeah, you know better than I do. I can't.
Yeah.
I don't remember when that was. I actually thought you were in another group. So I haven't messed around with all the strategies. I started out with the cash secure put, just to learn how that worked. Doing the safer side there, getting that 2%. Then I got into the credit spread side, which has been a lifesaver for me. I've tried other ways and it wasn't really working well for me. Obviously it was a bad market this year, but things were just tanking. Couldn't get it going. So I messed around with his Lance's credit spread style, really focusing on the deltas and the thetas, how he preaches. So that helped a lot. Those are the two I've mainly done a lot with. I just messaged Lance before all this about this strangle he's been mentioning. So I'm hoping to give that a shot a little bit. I haven't got into the futures yet because I just don't know think or swim that well. But I'm interested to learn this one.
Very cool, yeah. And Husker Not Josh, he's back. So I think you're muted at the moment. All right, now I see you're on. So you had something to talk about with the calculator or something, right? For the future spread, the future strangles.
Yeah. So with the MES futures, I just thought it'd be really helpful to have a calculator that kind of calculates what your break even is, what potential profit is, and then if that the second contract gets assigned, for you to kind of have a calculator that averages those two contracts out. And so I will try to show it here. Just a second. Sorry, this is the first time I'm trying to share my screen. So
yeah, no problem. So you go down to the bottom and it should say present, and then share screen should pop up as the bottom of that menu.
Yep. Okay, give me just a second.
Corey asked to use the PCS. Yeah, right. Jimmy, you use a lot of those put credit spreads, right?
Yeah, so sorry. Yeah, I do a lot of the credit spreads right now because I said the buying power is a little less. You can get a little more premium like the top, but you taught me how to do it away from the money, be a little safer. And with the theta traders itself, just the group, communication is key in anything you're invested in, working on. So having the help has been big. I've done some other groups and stuff. They just ignore you. So the fact that you are hands on right there with it, that's been very helpful. It saved my account actually.
Yeah.
'Cause it
And you did one today.
Or-
You posted one today on QQQ, and we're like, yeah, it looks like a good trade. So
Are you guys able to see anything?
No, nothing's popped up for me. So normally when you hit share your screen, I'd see a pop up, and then I could add it to the stream.
Okay.
Do you want me to do it? I think you sent me a link, right, for it just a little second ago. Let me see. So I can just pop it up if you want. I think I have it. Let's see.
Okay, yeah. Yeah, like I said, so this is my first time sharing. So it'd make me restart Chrome. I mean, I can do that if you want.
Just give me 1 second. I think
you got spam, Russell.
I think this will open up. Just give me 1 sec. So present, save, share screen. So yeah, that's the problem for me is it's not in it's coming up in Chrome, so I need to switch it to Firefox. Or
I'll do it real quick.
All right, you do it. How many
Sorry.
people does it take to share a freaking spreadsheet, right? It's like,
Well, yeah, and like I said, this is a fairly new laptop, so I haven't ever shared anything from it. So
It's okay. Do you guys see my end?
yeah, I just saw it pop up, so I'll add it to the stream now. All right, there we go. So it's kind of small, but that's as big as I can make it. Can you zoom in on your sheet by any chance? Like, yeah, there you go. Start making it a bit bigger. All right, that's good. Yeah, we can start to
So,
see.
Josh, you might want to walk around through it. I was fiddling around for the last few days. This is brand new to Theta. We didn't post it yet, but we're finishing up the fine tuning of it.
Mhm.
So essentially, you have the covered strangle here. You can write down when you got into the trade, how many days you have left. You would type in the bought contract, so what price you bought it at. You're going to put in the sold call price. The reason why we're doing that is if there's a net gain here, so if you're selling at 3,800, but you bought at 3,783, you would make some profit here if it closed above 3,800 expiration. But the calculator will actually figure out the total profit, including this. And then you're going to put in your premium received. This is the premium from selling your call and selling your put together. So essentially, what's good about it is you just put these numbers in, and then it'll show the break-even price.
I like that. Yeah.
Can you hear it?
Yeah.
Okay, so it'll show the break-even price where since your bought contract minus the premiums received. So this minus this is your break-even. It does figure out your profit, again, including that extra sold call if you sell them out of the money and you want to possibly get some gains there. It'll calculate the profit there for you. So I have two different ones going here. This is the current one I'm in. This is another one I'm testing out. And it does show the profit above sold price. Here's another good part of it. If you do get assigned on the contract, so that means you sold the put and it happens to drop and you get assigned on it, you would put in the price you get assigned at. So let's say I sold the 3,600 put and it goes to 3,599, you get assigned on it. You just put in the assignment price of what you sold put was. You put in your bought contract that you originally bought it at. You put in the premium that you received so far, and then it gives you the average of the two contracts. And all
Yeah,
calculated for you, right?
that whole thing, besides like, I'm trying to think because let's see, it should pull over most of the stuff from the first sheet for
Yeah.
you. So
This is my rough draft. I think I might have fiddled around with it, but we'll make sure we get all the kinks out.
yeah.
Yeah, like you literally have to put these in and then put in the goal.
Yeah, because I just looked at my updated one. So all you actually have to put in should be just the assignment date. So like if the shortcut got assigned, you'll put the date, for example, say 10/28 tomorrow or whatever. And then you'd put the assignment strike price should just transfer over for you automatically too. So
that's awesome. I didn't realize that. I'm gonna definitely fiddle around with it. Yeah, it's a good one. You could also track if you're doing these for quite a bit of positions. It'll show you your break even, your profits. This will be the column you focus on.
This third one should be like, so if you have 2 contracts, then you can kind of keep track. I have 4 and 5 rows just in case like you don't get rid of it the following week either. You should be able to just drop the new break even down to the contract average line, and it'll just keep track for you throughout until you finally do get rid of the contracts. So
yeah, that's a good point. So again, if you have the 2 contracts and you're just waiting, playing a little defensive, selling 2 calls against it, you're just trying to lower your break even more and more. So then when you do see that eventual rebound, you could make a good amount. So if you're able to sell it at the break even, you would get the premium collected. That'll be your profit. And you could decide to sell above it too if you needed to get some extra gains on it.
Very cool. Very cool indeed. Yeah, awesome. So so you guys are in Theta Traders at the moment. Like, I don't know how many of you guys are actually in the Inner Circle or Lifetime Yearly system, but this is all going to become available inside the Inner Circle. So yeah, I don't know, like, is Casey in the Inner Circle? I'm guessing he is. I think he's probably in.
Not sure. I don't remember the top of my head.
Yeah. Anyway,
it's hard to remember.
Yeah, so anyway, we're going to add a whole bunch of stuff to the Inner Circle. So if you're in Theta Traders as it is, it's the idea is that we're adding all of these strategies into the Inner Circle part of Theta Traders. So Casey's asking now, actually, I'll put this up. So what are all the strategies that Theta Traders do now? So I'm going to share my screen and we can go through exactly what Theta Traders has in the main part, but then some of these strategies that we're talking about are only going to be available for Inner Circle members. And those are people that have paid for the year up front kind of thing. So it's like an advantage to paying a little bit more. So, I
got in just last night, just reading through the strategies in the Inner Circle. So there's a lot of new stuff in there.
Yeah, I think it's awesome. It's like this strategy alone is probably worth a lot just for the upgrade size. But there's other stuff too, which is cool. So why don't I pull up my screen and we can kind of chat through like what you get in Theta Traders for people like Casey, but also like what you get in the Inner Circle as well. So just give me a sec. I'll try and find my screen and share. Let's see. Share screen. All right, here we go. So yeah, so you guys should see the Theta Traders website up here. It starts up here. But the area that I'm most interested in talking about at this point is the Inner Circle, because that's really what we're talking about here. This strategy, which is pretty amazing, is an add-on to Theta Traders. So we can talk a bit about this, but let's look at some of the basics you get as well, just in the main Theta Traders, which are awesome. So let's try to make it as bullet point as possible here. So you guys let me know if there's anything missing here that I've maybe like somehow missed over the last few weeks that's been added. So you guys are still doing the 2 high probability cash secured put trades every day, right? But you're also given spread options on those as well, right? Yep. So, sounds good. So let's see. Just check where we are. Somebody's full. Yeah. So that is the first thing that people join for, like the basic Theta Traders, is because it's so chilled out. You basically set these things and wait a week or two and then cash out, hopefully for 50% plus profits. So that was kind of where the service started, right, Lance? That was kind of like the first.
Yeah, we were just doing the cash your put credit spread one a day every day, and that's what I mostly do on my personal account. But I know a lot of members they do those. They do the 0 DTE as well, where we every day look at SPX. We're looking to get about 2% on our money every day, and then you pretty much get in and out in usually an hour or two in most cases.
Yeah, after reading the ebooks on those and you give the option trades, it makes it easy. You don't have to learn. You don't have to know it right away to get into it. You know, you give the trades that are pretty safe, and then you can start making your money there. And then read the ebooks and strategies, and you learn how to do it yourself a little more.
Yeah, I know Jimmy does a lot. He was doing a lot of the credit spreads, cash secured puts, and now I think you're starting to dabble in the 0 DTE, right?
Yeah, a little bit. I just, Bobo keeps getting all that free lunch. I just want one time.
Yeah, you'll get your free lunch tomorrow.
It's coming. It's coming.
The free lunch, yeah. Yeah, and I think it's important to point out that it's probably not a good idea to just join for the 0 DTE trades, for example, because you don't want to be going full account into the 0 DTEs. You want to spread out your money, right, between different strategies here.
Yeah, the reason I started doing this is because I've made enough for the last 2 months using the credit spread and cash secured puts you all taught and have a little profit to play with. So
that's cool. Yeah, that's good. So like one strategy is feeding into another strategy. That's pretty cool. So
yeah, like I said, I started slow with the cash secured put, and then the credit spread slowly, and then kind of just played from there.
Yeah, and I think people are familiar with this style of trading. If not, I already put a link into the chat box about where you can find our mini course where you can go through and kind of learn the absolute basics of what we're talking about here. Just in case you're listening and you have no idea what we're talking about. It took me many, many years of trading before I came across this style of trading. So to me, it was kind of gibberish for the longest time. So for people that don't have a clue what we're talking about, what a cash secure put is and all that, I did put a link in the chat box. And if you want it again, I can repost it and you can go and check it out for like just some general information about these types of trades. So these are the things that you get in just regular theta traders. I don't think I'm missing anything here, right? It looks like I've covered pretty much.
Yeah, that's what all the quarterly members do receive.
Yeah, so that's if you do quarterly. However, what we're talking about today is this inner circle membership, which is a fancy way of saying you get everything you ever wanted. And you get it with some extra strategies involved there too. And that's where this idea of doing these covered strangles comes in. Lance is doing those exclusively in there. And they're doing extremely well. So it's something that'd be worth just for those. But you also have a whole bunch of other things going on as well, like your workshop stuff, full access to all of your trades, including longer term holds, and your famous one-on-one Zoom calls to help people when needed. So you want to elaborate a little bit more on like kind of what else is included in there?
Yeah, so in the Discord, we have different inner circle channels. One is just my trades. And anytime I do any trades in any of my accounts, it could be long-term buy and hold. Like today, I bought MPW, a REIT for medical. I bought Microsoft because it went down again, and I think it's a good long-term hold. Like I'll post that. Any strangles that I do, anything there's not like an official recommendation that I give, I'll just post it for everybody to see, just so they could either learn from what type of strategies that I'm doing. They could easily join as well into those trades if they want to. My Lance's workshop is kind of my like brainstorm. My brain just like lets out stuff throughout the day because I think about this stuff all the time. And I'm like, oh, that sounds good. I'll just tell everybody about it. So I'll say like, yeah, I'm thinking about selling this call at this particular strike price. Maybe if it goes down to this price. And like it's pretty like, I wouldn't say all over the place, but it's more of like, this is what I'm thinking. Maybe I'm going to try out a new strategy in the next few weeks or so. And this is how I would set it up. The access to all trades, again, that comes with the inner circle, like every single trade, even Roth IRA trades I'm doing, like buying Microsoft and holding, those will be listed as well. And then we do one-on-one Zoom calls. If you join on the yearly, you'll get a one-on-one call with me, and we could go over anything you want. We get Zoom calls of all different types of questions, like how do I deal with the margin requirements I'm currently in, like what is the best strategy that I should focus on right now? It's like, okay, I'm good at this particular strategy. What are some other ways to open it up? We had one recently that was doing mostly 0 DTE, and they were looking for more longer term, similar strategies that we do. So we went over the longer term puts and spreads and whatnot. So the inner circle membership gets all those additional benefits as well.
Yeah, and the cool thing here is like what you're offering here, and I've been reviewing services for 5 to 10 years now. These prices are like the lowest that I've ever seen for this type of service, where you'll actually get on calls with people, like you'll be really helpful and help everybody on this type of level. And so I think really it's worth the annual subscription. So to get access to the inner circle, all you have to be is an annual subscriber. There are 2 tiers here, so you can join annual. So every year you pay $647. That's actually down 20% from the listed price just a week or two ago. And also the inner circle lifetime. So that's $14.97. You're saving 30% on the current lifetime at the moment. So I'll put a link in the chat in a few minutes so you can go and sign up for these things. If you're already a Theta Traders member, reach out to us. We might be able to do payment plans if you really want to be in with the inner circle guys as they add more and more stuff, like more and more futures trades, more and more strangle type stuff. Because my guess is this is gonna slowly grow, right, Lance? It feels like there's going to be more and more inner circle stuff as you come up and test and come up with new strangle strategies and things.
Exactly. I mean, my brain is constantly thinking about new things. Yep. Some of them might be just in test phase. Let's see how it works, and then we notice it's not a great strategy. Might just leave it in the back burner. Sometimes we'll see one like the covered strangle, and in the workshop, I was posting a lot about my thoughts before I was even entering the first few trades. And then as I was in the covered strangle throughout the week, my brain's just constantly on like a bicycle wheel turning and turning. So on a random Wednesday, I'm like, right now you could close at this % profit, but I'm going to wait until Friday because I could get this extra X % profit. So constant things that are coming up in my head. And in the inner circle, we do get a little bit more of that, like smaller attention people that are really focused on these things. They could write on these channels as well, and we obviously respond to those. So.
Right.
And the good thing is I basically paid for my annual subscription the first couple months just doing your strategy. So that's not even getting into the new one you just taught. So you get that covered pretty quick.
Yeah, definitely. And yeah, so like I was saying, like the pricing here. So for me, like I've reviewed people like David Jaffe and stuff, and David Jaffe will charge $350 for a month. Lance is charging $647 for a year, and I've been in both services for significant periods of time, and it's an absolute bargain for what Lance is offering here. So especially if you upgrade to Inner Circle. And also remember, we will do payment plans. So if you really want to be in here, but you don't want to pay $14.97 up front, for example, just contact us. We've done payment plans for a couple of members already. So help spread out the cost kind of psychologically and nothing else, right? So, yeah. So let's see what questions we have. It looks like, let's see what strategies you're using. So Corey would love to link up with Jimmy and see what strategies they're using and how they are working. So maybe you guys could chat. You're both in Theta already, though, so you need to reach out. So, Jimmy,
Corey, I don't know what you're.
So I can share your usernames on Discord if you want.
Yeah, more than welcome to. I was
going
to say next, if anyone has any messages for me, because I'm in the inner circle and member here, I'm more than happy to talk to anybody.
Yeah, definitely. So, let me see. So let's share the link for Theta Traders. So for anybody that's watching this that hasn't ever been on the site, you can come and check it out.
Corey, it's JWS with random numbers after it.
1, 2, 3, 4. It's really hard to forget.
Yeah.
Really creative.
And Corey's the Vandals, right?
The Vandals.
So I just posted the theatraders.com website in there. You can go and check out the different subscriptions. Reach out to Lance or myself. Let me just get my screen sorted out here, so that you can figure out if it'll be right for you. I see a question from Casey. Let's just put it up. Does the Inner Circle include the annual subscription, or are there two separate fees? So that's an interesting question. We're not doing it the typical way. So most places would say, hey, we have an Inner Circle. It's worth $10,000. That's what you have to pay to get in, right? The way Lance and I decided to kind of do this is say, well, if people are paying for an annual membership, then they can have Inner Circle access. And same with the lifetime. Obviously, the lifetime is forever. And the annual will have to renew, obviously, if you want to stay in. So the choice is really yours, which one you want to do.
Russell, I'm sorry, I don't mean to cut you off, but Lance, maybe I'm wrong or not. I don't want to say this the wrong way. Even through the chaos earlier in this year, your strategy still worked, right? They did.
Yeah, with this whole year and 10 months, we had 2 negative months, but the negative months were under 2%. So it wasn't a dramatic loss.
So that's huge for anyone in a normal market like it was, dropped 40%. You still find a way to stay above. Yeah,
like there were some months where like our target's around 2.5% a month. We had some months that were pretty much break even, and we had 2 slightly low months, but most of the months have been anywhere between like 0.5 to about 3%, give or take the month.
Yeah, that's saying a lot right there, because I know I was, like I said, I joined you, I guess you said early summer. My account was crushed before I jumped in, so that's awesome just right there.
Yeah, another thing to reiterate, because there's a lot of members that might be quarterly watching right now, and you may not be aware of the inner circle. If you're in quarterly right now and you're paying for the quarterlies, it ends up being more than paying for the yearly, and you're not getting access to the inner circle as well. So if you're liking Theta Traders and you're currently in it and been in it a little bit of time, we've had quite a few people upgrade to the yearly because, one, you save money in the yearly compared to paying quarterly, and two, you get that inner circle. You'll get that one-on-one Zoom call with me. You get all my thoughts, all my trades as well. So.
Yeah, exactly. It's kind of a no-brainer, really. A lot of people have been upgrading recently. We had a lot of people jumping into the inner circle, and I think it's the right time to do it as well, just because it kind of is a new tier to the whole thing, and it does seem to be something that's going to be super valuable. And honestly, I don't think you can stay at this price for very long, right? I mean, you're getting a lot of value for the price, so it's pretty good.
Yeah, so I'm in debt to you. You saved my account, so
that's always good. Yeah, I saw your testimonial, Jimmy.
Yeah.
It's like, you saved me, I owe you everything.
I was down, and it was a luckily quick turnaround when I got into Lance strategies or Theta Trader strategies.
It's always good. Always good. All right, guys. Well, I think I'm not seeing any other questions. You guys listening? Do you have any more questions?
Casey asked if I use Thinkorswim. I do use Thinkorswim for my credit spreads. I use Schwab for my cash secured puts and a Roth IRA. And I do use Tastyworks for the futures, because the Tastyworks commissions are lower for futures than compared to Thinkorswim. So I really use all three. You don't have to do that, but you would get you can do all of them in Thinkorswim if you wanted to, and there's nothing wrong with that. I just wanted to save a little bit on the commissions, so I use Tastyworks for that.
Erin's asking, she's asking if the annual trades are the inner circle, but just for 1 year. Exactly. It's just a 1 year membership to everything, and including inner circle.
Yeah. So if you're already in the quarterly, you're getting the cash your puts and spreads and 0 DTE. If you upgrade to annual or lifetime, we just add on the extra channels to the Discord. You don't need to do a new Discord login or anything like that. You'll see additional, those inner circle channels pop up. You'll still get all the trades that you're normally getting, but then you get all these other trades for futures and buy and hold and all that as well.
Yeah. I think one benefit you said they're essentially the same, but your annual subscription, people get like one live Zoom with you, where like if they go inner circle, they can do it multiple times per year. Is that right?
Yes.
Yeah. So
and we
that's a benefit if you're really looking for in-depth help and like the chat and like on a video call with Lance, and he'll do that unlimited with you on the inner circle. So
right, like we also do the one-on-one Zoom calls for anyone that's in lifetime or annual, and we also do smaller group inner circle Zooms as well. Like we had one a few weeks ago where a little bit more sociable, I guess. There was only about 3 or 4 members, and we're just deep diving into questions you had.
Yeah, for sure.
Can't say enough. The communication, your help is big. It's a lot of people needing this stuff. It's not easy to pick up, but you have the patience of a saint, so that helps.
Erin, I think Erin might be a little confused. She's saying she's interested in annual until I could work up to inner circle. If you join annual, you get the inner circle. So
you just don't get the extra calls, right? That's the main thing.
No, in annual, you get a one-on-one Zoom call with me as well.
Right, but there's more. You're more available to the inner circles that do lifetime, right? Is what we're talking about.
If you needed multiple Zoom calls, then you would want to join the lifetime. And obviously, with my schedule, we'll try to set up a time that's good for both of us. But you could do as many Zoom calls as you need. For annual, you get at least one. If you put me in a good mood, I'll give you a second one for free.
Oh, that's funny. Well, comment section's getting spammed tonight with Tinder hot adult dating sites. Oh well.
There's better and more ethical ways to make money than spamming comments, right?
Yeah, yeah, definitely. I haven't seen it happen yet. It's the first time. Just the first time I've seen the chat get spammed so much.
We must be getting pretty popular now, right?
Oh yeah, it must be it. Yeah, we're taking off, hitting the big leagues. But yeah. So Aaron, if you want to upgrade, just message Lance or I, and we can switch you over to the Inner Circle Annual if that's what you want, or Inner Circle Lifetime if you want to get the extra calls or whatever. So you can also do a lot of people have been doing this. Is like they're saying, hey, I want to be in the Lifetime, but I don't want to pay $14.97 up front. Can I split it into 4 payments? And we've done that with several people recently, where they get the advantage of the whole Inner Circle and forever and more Lance contact time help. So yeah, just we can customize payment plans as well. It's like not set in stone. Sometimes we'll split it into 4 payments, or whatever kind of works for you.
We just set up one from someone in Australia, and they were worried about the currency rates. So they decided to split it up. It's more beneficial to them, and we're very open to that. So.
Yeah, so Aaron's saying 4 payments would work. So yeah, just send me an email, because I'm usually the one that takes care of like the payment side of things. So I'll type my email for this. I have so many emails. I'll just put the one that I usually use. So protonmail.com. So just email me at stuffalertsreviewed@protonmail.com, and I'll get you sorted out with a payment plan for either annual or Inner Circle Lifetime if you want. Just let me know, and I'll get that sorted for you. Pretty good. Cool. All right.
Any other quick questions from anyone else in the group?
Nope. Don't think so. You did a great job of explaining everything, so everybody's just like, okay, got it now.
Yeah.
Off in the merry way. So, yeah. Well, thanks for joining us, guys. Jimmy, it was good to have you on. It was good to say hello.
Yeah, thanks for having me. Nice to talk with you all.
Yeah, it was good talking to you again, Husker Josh. So,
yeah, happy to help out.
Yeah, nice to finally talk with you, Josh. I've seen your name pop up enough, but
yeah,
pretty good. All right, guys. We'll have a good evening, and we'll see you in Theta Traders tomorrow at some point.
All right. Thanks, everybody.
all right. Thank you, Lance.
Cheers. Bye.